The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. Good evening, and welcome to this evening's presentation. My name is Adam Harris from Trade with Precision, and I will be your presenter this evening. Welcome. Our topic for tonight is going to be what is price action and how to analyze candlesticks. So I'll be hopefully transferring a lot of information your way, hopefully useful information that you can do a lot with. And also this is brought to you, of course, by ATFX as well. Now, the first thing I do need to do is give you an opportunity. I just want to check. Yes, there are two disclaimers. I need to give you an opportunity to view both. And while we're doing that, I'm going to tell you a little bit about myself. So I am a fund trader based in London, and I'm also one of the market analysts with Trade with Precision. And so we have a partnership with ATFX, and really it's to do with online education. So we'll be bringing you market analysis, technical analysis skills, as well as risk management, psychology, various different topics throughout the year. And so welcome to this evening's one where we're going to be focusing predominantly on price action. We'll be having a look on the platform, on the MT4 platform as well, looking at the existing market conditions as they are today. I'm always curious. If you want to let me know where in the world you're listening in from, feel free to type that into the questions box. I'm always curious. We often get people from all around the world, and I'm always curious to know. Also, especially if you are brand new to trading or potentially an intermediate trader, someone who's been dabbling for a couple of years and looking to achieve consistency, then this presentation is most likely going to provide you with value. Now, I think that's enough time on that disclaimer. There's a second one, and this is also a Trade with Precision disclaimer, so also making sure that you're aware of this. Trade with Precision is not a signal provider, and really just make you aware of that. Also, can I do a sound check, making sure that you can hear me and that the sound is good? So again, I'd also like this to be as interactive as possible. Don't be shy. If you have any questions, just type them into the questions box and I will answer them as we go. We'll be spending quite a bit of time on the platform. I'll take you through how I go about setting it. Can I actually do a quick survey? How many of you are familiar with the MT4 platform? Who is not familiar with it, let me know that. That way I can also spend a little bit of time just talking you through how I set up my charts, how I go about creating a watch list. We'll have a look at market conditions, and we'll talk about it in the context of price action. So, it seems to be a very, very quiet bunch. Just want to check that you can hear me. Is anyone out there? Can I get a response? Just checking. Okay. I just want to make sure that you can hear me as well. So presumably there aren't any complaints about lack of audio, so I think we're probably fine. There we go. Thank you very much. Okay, there we go. Great. Brilliant. Okay, thank you, ladies and gents. All right, so our agenda this evening is going to be talking about what is price action and how experienced traders analyze it, reading the signs, interpreting candlesticks and candlestick patterns, how to turn these signals into potential trading opportunities, a real-time analysis of the current popular market price action and any potential opportunities that may currently be setting up, as well as why doing this with ATFX. So, okay, brilliant. Great, just reading your comments as we go. All right, so the first thing to take away from this is that we are technical, analytical traders. Trade with Precision, all the traders that trade with Precision are trend-based traders. So I've been trading for nearly 9 years now. I've been trading professionally for almost 5 years. And I've done a lot of different programs, read a lot of books, watched a lot of movies, done several programs, obviously, and it's quite interesting because although I spend a lot of money on education, there's so much education out there, but not all of it is necessarily designed in a way to enable traders to build up technical analysis skills and really build up from strategies from there. So I was doing it for about 2-3 years when I was probably in my second year when I then discovered Trade with Precision. So I discovered them later on and then started following from a distance and then ultimately went through their program. And this goes back about 7 or 8 years ago. And so what I like about it was founded by Nick McDonald, who is the most natural trader I've ever met. It's worthwhile. So what I'm trying to do here is really give you a sense of what it's like for traders, real actual traders who work in the city, fund traders, prop traders, and to give you a sense of what it's really like. So first of all, we are predominantly technical analysts. Secondly, We trade trends. We're only interested in trending markets. We can trade any market that is trending. That means we can trade currencies, we can trade commodities, we can trade indices. Our focus is predominantly on something, but it must be trending. We're not trading the euro dollar because it's the euro dollar. We're not trading gold because it's gold. We're only trading and only interested in them if they are trending. So this is very important. I myself am a swing trader. So a swing trader is generally a trader who trades the daily time frame. I do that for the most part, occasionally looking for entries on the 4-hour time frame. Although I am capable of trading on the lower time frames, the 1 minute, the 5 minutes, I find that for my lifestyle, it's about half an hour a day on average for me to scan the markets and to look for potential trading opportunities. Usually I will have markets on my watch list. So we'll go through a few of those and I look for trend-based entry opportunities. So basically, the logic is very rational. Trading should be sensible. It should be rational. It should actually make sense to the trader. It should make sense to everyone. Basically, what I'm doing is looking through the markets on the daily charts, for example, and looking for a strong trend. So I'll demonstrate that in front of you. In a moment, I'll demonstrate that to you. And then what I'm looking for essentially is an entry, an elegant or optimal entry into that trend, and then I'm looking to take profit. So all of, trades are generally, we've got to obviously employ a stop loss, which is there. The purpose of a stop loss is really there to minimize the damage that losing trades can do to our account. Because no matter how good the trader, it comes down to statistics and probabilities. We will have a certain number of losing trades versus a certain number of winning trades out of every, say, 10 trades. And basically the stop loss is there to minimize the damage to our existing capital. And the take profit orders that we use are there to make sure we grow our accounts. So we cannot grow our accounts if we don't take profit. And there's a couple of things that beginner traders or traders who are struggling to find consistency tend to do, and I'll go through those as we go through the presentation. But one of them is that they fail to actually take profits. All right, so they either trade without a stop loss or they have a stop loss, but they also don't take profits and they don't seem to know when to do it. So we'll also talk about price action, all right, different candlesticks, the details of those. We'll talk about reading the signs, interpreting candlesticks and candlestick patterns, right? We don't need to overcomplicate it. We can actually keep it very simple. As I said, I've read pretty much most of the big books out there, which also includes Steve Nissen's Candlesticks, which is very famous. It became the Bible for learning how to understand Japanese candlesticks, and we can really keep it very, very simple this evening and how to turn these signals into potential trading opportunities. So as I said, looking for trading itself should be a sensible activity. It should actually make sense, and I'll demonstrate that to you on the charts in a moment. A real-time analysis of the current popular market price action and any potential opportunities that may currently be setting up, and then we'll carry on. So what I'm going to do now is go through to the last slide, and then I can go to the platform and relax. I want to make sure that I've shown you all of the slides. There's only a couple more left, and then I can actually spend time on the platform and relax. So trends and candlesticks, live market analysis, that's where we usually go to the platform. But let's wrap up and just talk a little bit about ATFX, why choose them. They're regulated by the FCA. All right, so they have a license number if you need it. They're efficient, secure, easy to use payment portal. They are committed to providing competitive prices for their clients. Global investors' most widely used trading platform, MT4, so that's quite nice to know, and bespoke customer service and trade support. So they're relatively up and coming at the moment, and so it's worth your while to know that. So I think I'm going to come back to this slide at the end. These will be the contact details towards the end of the presentation. Let me just check that. Yep, that's right. So that'll be the final slide. I'll come back to this in the last minutes. If you do have any questions, please feel free to contact anyone with this, either via email or phone call. And if you do have any questions, I'm sure the lovely folks at ATFX would love to assist you. So the next thing that I'm going to do is switch over to the platform. Just want to make sure that you can see it. Yep, looks like you could see it, so that's good. And so what I have done is I'm using the standard MT4 platform. This one, the MT4 platform itself is a relatively popular universal platform. The beauty of it is almost so raw and simple in its structure that it's very difficult to not know how to use it. It's pretty straightforward. So what I'm going to do here for the time being is kind of go about creating a layout so that you can see how I went about doing this. So just going to save this quickly and then go through to the next profile. So let's say if I want to go ahead and just create, let's go to the default one, British pound. I don't really care which one it is. So what's market overview? I want to just see this one. There we go. Okay. So what I'm going to do here is quickly actually show you how I go about creating this. I prefer to start from scratch. I have a list of instruments that I can trade on the left-hand side, and I can actually access them. It's very straightforward. There's basically icons here that are all available via the drop-down menu. Okay, so it's a very quick 5-minute introduction to the platform. So basically everything has an icon and is also accessible through a menu. So there is a bit of duplication there. There's basically a list on the left-hand side of indicators as well as expert advisors, which are either robots or tools that we can use. Indicators, of course, we can access there. Indicators are also available here at the top. We can access those through the top usually as well. And so what I'm going to do is I want to have a look at all the symbols that are available to me, and this will usually list everything that is there. So what I have done is I've gone through it and really only activated the ones that I want to use. So the beauty of this is the platform runs faster if I'm only obviously loading up the ones I want. So I've loaded up the ones that I actually trade in real life. These are the ones I'm more interested, for example, in the DAX, the German 30, than I am in, say, the Spanish 35. So these are the ones that I actually trade. And that shows you pretty much all the charts that I would look through personally for trading opportunities. So, of course, what I'm going to need at this point is an actual chart. And so I'm going to go ahead and just bring up a chart at this point. For now, it'll be worthwhile just bringing up the Dow 30, creating this chart. And what I could do is I can also make it full screen. That's fine. It'll be, and then I'm just going to do a few things to it here. This allows me to just push price away from the right-hand side. So I've got a bit of space here, and I could adjust it. There's a little bit of a small triangle there. I could just adjust it. I don't always like it. I don't want price to be right up against the right-hand side. I like to know that it's just there and I can see it. The grid is a bit distracting for me as well. So I'm just going to remove that. That's Control G, and I'm just going to zoom in a little bit. I can adjust the time frames. So up here, I've got time frames that are listed going from 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, and weekly, and monthly. And also what I'm going to do is to switch it to candlesticks. Okay, so I actually have the ability here to go into the properties and change it to either yellow on black, green on black, or black on white. So I can change the colors if I want a white background. And then what I'm going to do is just quickly change those colors. So for example, I want my bar up to be green, and I'm just going to put that in my bull candle, and I want my bar down to be red, and that'll be my bear candle as well. And if I just say OK, then I get that white background color, and just switch it over to candlesticks. There we go. So this gives me the candlesticks that I'm looking for, the information I'm really looking for. And what I want to do as well is really get a sense of where my horizontal levels. I'm going to stick my chart, my default chart, onto a daily time frame. So this is what I'm really looking for. And if I ever feel that there's some data missing, I can just hit the refresh button, and it will quickly just re-download any, or double check that all the data has been downloaded. Then we can obviously see we are connected here. We can see at the bottom we are connected, and price is bobbing up and down. Now, anytime I want to change what's in this, I could just left mouse click and drop it into the chart, and that will bring in the data. So I'm now looking at the daily time frame for the euro dollar. What I want to do on top of that is to give myself, so in other words, it's not just price action, but this is the basic stuff. So the most powerful things that we can look at as traders starts with price action. It's nothing to be intimidated by. There's often a lot that it can tell us. Let's just change through to a chart that's trending. This has got a very strong trend on the daily. If I go down to, say, the 1 hour time frame, you can see that there's a clear series of lower highs and lower lows. So this is important because if we're looking at certain markets, there isn't really a clear trend. I'm just going to spend a moment here talking you through price action in isolation and looking at how we can see that the market is clearly trending. We use a word called momentum. And momentum is really, simply put, is a way that we go to describe that the market is clearly telling us where it wants to go. So in this particular chart, the momentum is bearish. Okay, it's clearly saying I want to go down somewhere. Whereas if you look at this little area in here between the two lines that I've done where price action has been between these two levels. At this point, when it was sitting between these two levels, it's now broken out below that. But at this point, there was no clear momentum. While it was ping-ponging between the top and the bottom, there was no clear momentum at that point in time, and it was therefore without any clear momentum. So basically, as a trend-based trader, the very first thing I need is to run through charts and find charts that currently have clear momentum, as this one does. So I like to look at the daily first. I'm going to just load up a couple of charts and see if I can find something that has no clear momentum. This one here is slightly more bearish. Before I throw in the moving averages, you'll see there's a few things I can do to make it a bit easier for myself. This one at the moment is a little bit unclear. Right, it was in an uptrend producing high lows, high highs, and it's still trying to stay to the upside. It's not a very clear trender per se. This one is now trying to attempt to trend to the upside. There was a period back here where it had no clear momentum. So basically, I've got to ask myself, I've got to look at what price is doing in the last 10 to 20 candles and basically say, is it trending up or trending down or not trending? So I'm just looking to see if I can quickly find a chart that has no clear trend. This one is actually starting to trend upwards. Let's look at what was pound CAD looking like. Pound CAD overall, you can see that generally speaking, this would not be very high on my list. Why? Because, well, it's generally stuck between a range on the daily basis. It has trended in the past. It's now stuck between a range. And so of all the different things, if I had to prioritize or pick a specific asset class to trade, this one would be lower down the list because it's just not as clear about what it wants to do. So the next thing that I'm going to do to assist myself is I'm going to insert a trend indicator, which is basically a moving average. All right, so I'm going to go through my indicators, trend, moving averages. And what I want to do is put in the traditional ones. I'm going to use a simple, and I'm going to put in 3. For the purposes of this evening, I'm just going to put in 3 on each chart, and I'm going to add in a 50 as simple. They're all going to be simple moving averages, and I'm just going to put them in. I'm going to use traditional colors. So this red is the traditional color for 50 moving average. I'm going to go in and insert another one. So go through to insert these. And this one will be a 20, and it is traditionally blue. So let's just see if there's a slightly lighter blue than that. That one's a bit on the dark side. There's royal blue and medium blue. Let's go with that. Medium blue. And then I'm going to throw in a 10. So, and I'll explain the logic behind this in a moment. So we'll do that, trend, and throw in one more. And just take on, for now, I'll do it as a black. Black's very dark. I think I want to go with a dark gray. That's fine. So there we go. So I've got a dark gray one. And really what I'm generally looking for is to find, if you look at the conditions here, so the way that Trade with Precision has done this is how do you first of all, reverse engineer what a really good trend looks like. So you find a really good trend and then you break it down. What are the attributes that this structure of a really good trend has, and then you basically break it down, and then if you see those components setting up, then you know you're looking at a good trend. So you reverse engineer it. It's also a really good way to explain it to people who are new to trading. So if you look here, you can see that prices got a very clear momentum on the way down. You can see the moving averages are all fanning out in the correct order. We've got the medium term and the shorter term. The shorter term moving averages are the 10 and 20 moving averages, and so you've got the 50. And occasionally we'll have, say, the 200 longer term moving averages. In fact, I'll tell you what, I'm going to insert that then now just for this evening's presentation. We'll just do that. I usually don't use it as much, but it's worthwhile. For beginners, this will be the 200 moving average. And actually, if there's a stronger color that I can use, I think that's actually the best one. So there we go. So we have a 200 moving average. And so really what we're doing here is we have a longer term average of price, medium term average of price, and then that 10 and 20 together become the shorter term average of price. And really what they do here is if they're all in the correct order, then the trend is becoming established and it's really nice and strong. Now what you can see when price hits this patch between the moving averages and as well as the between these support resistance levels that I've put in, you can see the price is now on top of the 10, 20, and 50 moving averages. It's very much entangled in it. It is still entangled in it. And therefore, right now, this is absolutely not worth my while to trade. This is not a trending market. So that's something I want to be aware of. This is not a trending market, and so I do not really want to be too concerned with this one. So I'm going to leave this one, but if I had to go back, for example, let's go and have a look at, say, silver and gold, which are now starting to expand. What I'm going to do here, I've got tabs at the bottom, and I can also save this. This is actually being saved as my market overview if I want to have different layouts. But this, I want to take all of these colors because I don't want to create them again. I also want to throw in another tool as well. So I'm going to throw in an oscillator, two oscillators, actually specifically relative strength index. And this is going in with default settings. Just like that, default settings, nothing too fancy. I'm not really concerned with oversold and overbought, so I'm just going to go in and edit that one again. I don't care about that. That's not really that useful for most professional traders. There is my fixed minimum maximum, so that should actually be okay. So why have I got 70 and 30 here? What's going on? There we go, that's why. So that will be 10, just for the sake of it, and 90 just to keep it out the way. There we go. Okay, so I like this indicator. It's pretty nice. I'll explain how we go about using this in a moment in conjunction with price action. So basically, ladies and gents, tonight is about starting with price action and then adding on top of that. And then I want to insert one more, which is the MACD. So I'm going to go through to my oscillator here and just throw in a MACD and keep this one pretty much as is. So I've taken out for the MACD indicator. Again, if you are a beginner trader, you are not expected to know all of this already. You're not really at all. These are just little tools that we can use. These indicators at the bottom only constitute about 10% of my trading decision. Everything else is based off price action and the moving averages, and most importantly, price action and its relationship to these horizontal levels. So basically, we're trading price action, and it's all about the conditions. Traders must choose the conditions in which they want to participate in. So then we also look at these two indicators below, and so I've set them up. What I do is this is the kind of look and feel that I'm wanting on all of my charts. The first thing I'm going to do is just get rid of these lines. I don't want anything in here. This is going to be the template for the look and feel. I'm then going to save this. So I'm just going to save that template here and just call it defaults with indicators as an example. Okay. That'll be fine. If I go across to the gold 1 hour chart, just switch it back to a daily and then just assign that template, I get my look and feel. So there we go. So the next thing I want to do is just remove the 200 moving average so we have it simplified a bit. There we go. Now, what's nice about gold is that gold has been desperately trying to begin to trend. And it's actually been encountering some very, very strong resistance. It has finally managed to break out of that, come back, test it, and head off. And most importantly, the moving averages are starting to fan out. That means the medium-term and shorter-term averages of price are starting to fan out, whereas here, price was pretty much ranging, stuck between this range over here for quite a while. And so we didn't get much action on that. We attempted to break out, didn't really succeed very much, and actually got stuck back within a range. So you can see, and it does occasionally happen, you can have two horizontal levels close to each other, but you can see price actually struggling, ranging, there's no clear direction, and now it has finally managed to get out, starting to trend a lot better and breaking through this. So now I'm quite happy to start adding gold to my watch list. The daily chart is trending upwards, and that is the direction, only direction in which I'm looking to buy. I want to show you something as well. Again, because nobody really answered me when I asked about kind of, your degree of experience. I think I did that in the beginning. I'm not really sure how many of you are familiar with, say, checking the higher timeframes. So the topic tonight is really about looking at price action, but I also need to give you some context here. So we do look at price action and we look at specific candlesticks. And the beauty of this, ladies and gentlemen, is I'm just going to bring up a notepad so I can kind of type this out as I explain it, is that all price action, okay, which is to say candlesticks can only exist, okay, in one of two states. That's it. So I know that's a chart, okay, a chart is either trending or not trending. That's it. Can only be in one of those. Now, if it's trending, all right, then I just need to work out which way it's going. It's either trending up, or trending down. Cool. So that is the state of every chart we get to. Now, if I look at gold in the background, which is an example, this is trending because I can see an actual series of higher lows and higher highs. And prices wanting to go up. That the message is clear in price action. If I look at the last 10 to 20 candlesticks, I can see that it's actually intending to head up. It looks quite bullish. And it's the same with price action. Okay, so it's the same with individual candles, individual candlesticks. They are either sorry, I should actually say it's better to say that they can only exist in one of three states. All right, bullish, bearish, or indecisive. And that's it. So just as I know that there's some spelling errors here, so bear with me. I think it's indecisive, something like that. I think it's something like that. Anyway, so the key thing here really is that I wanted to increase the font size. So let's go up and make this a little bit bigger so that you can see this. You may not be able to read it, so I want to make sure you can. And really, this is how we can look at all candlesticks. We can look at charts that are either trending or not trending, and we'll have a look at that in a moment. And then if we look at the individual candlesticks, price action itself is either bullish, bearish, or indecisive. So generally speaking, if the trend is healthy, most of the candlesticks will be bearish. If the uptrend, if it's trending upwards and it's nice and bullish, then generally speaking, the candlesticks will be bullish or indecisive generally. They shouldn't be bearish. They should be bullish or indecisive. So in healthy trends, in healthy uptrends, we will find bullish candlesticks. In healthy downtrends, because sometimes it's a normal downtrend, we will find healthy bearish candlesticks. So it's important to understand that we don't need to overcomplicate it. The key to technical trading is often doing the simple things really well, not overcomplicating it. The solution isn't complexity, it's usually in simplicity, and we often tend to not really understand what simplicity means. So the first thing we need to do is to understand that an uptrend, if we look at a chart currently looking on the right-hand side so that all of our information is up to date, right now, this chart is producing higher lows and higher highs. It's broken through a level of resistance. It's now free to head up to its next level of resistance, and it's trending upwards. It's tested this level and is continuing upwards. So the direction in which I should trade this is pretty obvious. And so that's what I'm really looking for, is to see that opportunities. And I have a couple of opportunities. There's different ways in which I could trade it, either on the daily as a swing trading opportunity or potentially on the lower time frames. So if I go and have a look at this on, say, the 4-hourly time frame, I can see it's just started to produce higher lows and higher highs. It was in a downtrend. It's worthwhile knowing, if you go and look at the daily, you get an extension and a retracement. So that's normal standard behavior. Extension is in the direction of the trend. Retracement is counter trend. Extension and retracement. It's kind of like breathing out, then breathing in, and breathing out and breathing in. You can see when we had a downtrend here, we actually were breathing out and then breathing back in, breathing out, breathing back in, breathing out. So that extension, retracement, extension, retracement. Now, as traders, the first thing we want is a strong trend. We need a market that actually is giving off a clear intention of direction. It is telling us it wants to go up or wants to go down. Kind of like gold is here. Gold is saying, I want to go up. Then the next thing that we're looking to do as traders is to look for an entry opportunity into that trend. So that's the big difference that I think somehow a lot of educational programs miss that out. Start by letting traders understand that it's all about the chart they pick. If we need, if we want to go and catch fish, we need to ideally go and pick a spot where fish are known to be. If we want to make profits in trending markets, we need to first of all know what a trending market looks like and then choose to participate or trade a trending market. That's very important that we do that. But also, most importantly, is to not get involved in markets that have no clear direction. Any market that has no clear direction is definitely going to be changing direction. It's going to be unpredictable. It's going to cost us money. And it's going to be very emotional and painful. So professional traders only trade the charts that have a clear direction if they're trend-based traders. their entries may well be on different time frames. So here, although I have an uptrend of high lows and high highs, this little section over here, this very short little section, if I go and highlight that with a few signals, these are new features. I'm just looking, these must be particular to ATFX8. So I'm just looking at those. If I go through and insert, one of the tools that I wanted to do was actually a shape. Blup, blup, blup. If I go through, where are my shapes? Sorry, let me just go through and do this one. Insert. Here we go. Thank you. So let's go through, and if I highlight this little section here and go through and just edit the color of that one. I really would prefer for that to be a light color. Let's see how that looks. Nope, too dark. I mean, too light. Let's go through and just do it a little bit darker. That'll do. There we go. So we can see that. So if I go down and look at that on a 4-hour time frame, you can see that during that period where the daily was retracing, the 4-hourly was actually in a downtrend, lower highs, lower lows. And so what I'm really looking to do is always trade in line with a higher time frame. And there's two ways that traders can do this. They can either take what's known as a top-down approach, or they can do a bottom-up approach. So what is the difference between the two? Really what we're looking for is we always do, every trader is going to want the higher time frames to support the trading decision. It's kind of like having the wind at our back. We're really going to want to make sure that the market is moving in the same direction on the higher time frame. So if I look at price now, currently producing higher lows and higher highs, I'm really wanting to make sure that if I'm looking to, I should be looking to buy in this. It's in an uptrend. If I go down to, say, the 1-hour time frame, you can see here with the 1-hour time frame, price is producing higher lows and higher highs. Ideally for me, I'm going to, if I think of this as the time frame in which I'm going to take a trade, I ideally want support from, let's call it, 2 higher time frames. So I want the 4-hourly and the daily to agree with me. So if I go look at the 4-hourly, I can see that's also high lows, high highs. And if I look at the daily, it's also in an uptrend. So what I have there by doing that is higher time frame correlation, okay? And that supports the decision to take this trade. Now, even more interesting is if I then have a look at, say, the weekly, you can see from the weekly here that the weekly is in an uptrend. We are producing higher lows and higher highs. And currently, I would say the candle looks nice and bullish. You can see that level of resistance we encountered and price continuing on upwards. So what's really happening here for me as a swing trader is that I'm looking to trade the daily, which really means that I have to kind of keep an eye on the weekly and monthly to make sure that they are all bullish. At the moment, I'm happy with the weekly going up, and I'm happy to take trades on the daily or the 4-hourly, and so that's quite nice for me. Now, that would be, say, gold. So we were looking at some other charts here. We had pound CAD, for example, that is in a range. So what I'm looking for as a trader is to take somewhere, in case you're interested, somewhere between 2 to 5 trades a week. All right, I'm looking for 2 to 5 trades a week, ideally looking to yield about 1% net profit out of those, which, if it compounds correctly, is about 5% a month. That's a relatively realistic approach to trading. What I don't want to do is get involved in a chart that has no clear direction, such as this, and that's incredibly volatile. Problem with ranges is that there's just an ongoing battle. Price can change direction at any time, and it really doesn't help much. So I want to be focusing on charts that have a very clear direction. The next thing that I can do, of course, is go and compare different markets. So the markets are not all the same. We have currency markets. We might have global indices. So we might have the Dow. This is the US 30. We might have the S&P 500. This is interesting. That looks like the Nasdaq 100, the UK FTSE 100. We've got the DAX, Germany, the French CAC, that's CAC, the Japan Nikkei. We've got the Hong Kong Hang Seng, and the Australia, the ASX 200. Okay, so these are my indices. I quite like those. Then I've got some commodities. So I've got oils and metals, and then I've got a range of currencies to trade. Okay, and so I like, for the most part, I do like these indices. Look at this. We've got a nice downtrend here. Let's actually take you through and show you the DAX. So have a look at this one. Very nice downtrend. Look at the 200, 50, 20, and 10 all fanning out. Price interacting really well with those moving averages. This is an average of price trending down. If I look at the weekly, looking at the weekly, I also have lower highs and lower lows. So the beauty of being a trend-based trader is that I should only be looking to trade this to the downside currently. When the market is trending up, I'm looking to buy. When the market is trending down, I'm looking to sell. And when the market is going sideways or becomes incredibly choppy, then I don't do anything. The beauty of this approach is that when the stock market, for example, is booming, to keep it very simple, when it's doing incredibly well, I'm buying. I'm not shorting it. I'm buying. When it starts to stall and go sideways and fail, I'm not involved. I've stepped out. When it then decides to either carry on up, I switch back to buying, or when it starts to head lower and break through the floor, then I start to sell. So it's much less painful to really just follow what the market is doing. It's very sensible, and it keeps us unemotional. We don't have to figure out why the market's doing what it does. We really don't have to do it. That's the same kind of thing that has basically created madmen out of people, so we just don't need to do that. Okay, we just go through and do this in its own way. So really, for me, it's about keeping an eye on what's going on with the market. So this is my one layout. Let's just jump through to the other one that I had previously. I've actually set up here a daily chart on the left-hand side, and then a weekly chart on the top right-hand side up here, and a monthly chart on the bottom right-hand side here. So the purpose of this is to really give us a sense of what the market is looking like at the moment. So if we keep an eye on this market at the moment, you can see, let's go through, and what I'm going to do is throw in a couple. So we'll start off with the Dow, which is already actually in each chart, so that's fine. And this is one of the oldest US indices. It's founded in 1894. It's been going forever. And you can actually see this monthly time frame. We're technically still in an uptrend. There's no doubt that we are encountering some strong resistance at this level. And you can see, and I really think it's worthwhile highlighting a few of these levels. This level over here was the high of the dot-com bubble. All right. And then if we look at the previous high over here, we've got the high of the credit crisis. This is the mortgage crisis as well. And this is really where we are at the moment. So you can see that distance in the US quite far away from having broken through the highs of the mortgage crisis. Now, the other thing that's really worthwhile is noting that it's really only beyond this red line on the right-hand side when Trump came into power. That's pretty much it. So that, a lot of people would like, or Trump would certainly like to think that he's the reason we've had so much growth. In fact, that's certainly not the case. We've been in a bull market going back to March to October 2010. So I would say that up until this point, I would say that actually most of this is due to Obama, then a bit of indecision, then Trump is voted in, and we've had a big move to the side, and we're now starting to stumble. We're basically a bit overpriced. The market is due a correction. It's always going to correct, and it's always going to trend upwards over time. The stock market, historically, since the days they came into existence, they've always ultimately trended up. They do correct every now and again when they become a bit overpriced, and you can see what's happened here in the past. We are certainly at all-time highs, obviously clearly out of the US markets, and looking due for a bit of a correction. So if we now talk about price action, what's really worthwhile noting is the change in the structure of the charts. We've got relatively small, healthy candles carrying on here. This is actually on a monthly time frame. I'm going to show you the daily in a moment. So relatively small, healthy candles. You can see that now the candles have actually become quite big. So the increase in candle size is what we generally refer to as volatility. Okay, so if I go through and just mark when we kind of came into this section. So this was a section previously where we had some volatility that came in between around about mid-2015, about mid-2015 to mid-2016. And we've subsequently then broken out of that and headed on upwards. And this is where we are now. Now, this all kicked off in January for us. So this is really worthwhile just commenting on that there. It's January. We're almost in December here. And so candlesticks are quite big and volatile compared to that. So you can see the difference when the market goes through an uncertainty phase or a corrective phase, and the candlesticks get a lot bigger. We can see that the last time we had that was just pretty much at the tail end of Obama's administration and Trump coming in. And that was for most of a year, called it 11 or 12 months. And prior to that, we'd had a very nice steady market just continuing to climb and grow. And where we are at the moment, in fact, it's been the most aggressive recently. It's now starting to just need to correct. So there are a couple of different possibilities here, or different outcomes. Sorry, just sneaking a drink of water there quickly. So there's a couple of different outcomes here. We are still technically in an uptrend if we look at this. Here's our last swing low. We've got a high. Once we break this low, so there has to be something that says to us, okay, when this happens, then this uptrend is done or this downtrend is finished. There has to be something that tells us that. So this is our most recent swing low here. Once we break that, once price breaks that, then this uptrend, this one that's been running, is now extinct or it's finished. At that point, there are only two possible outcomes from that point onwards. The market will consolidate, which means it'll go sideways like it did here, or it will shift into a downtrend and a correction or a bear market, which it's done in the past. If we go back and have a look, we've seen it happen over here. So we can have either one of those. What's interesting about this is worthwhile noting, especially when we zoom in, is that if we have a look, you can see that we got a fresh high in price. This red candle slightly higher than this one. And the reason I'm doing this is I'm also giving you a market analysis right now of what's going on with the global market. Slightly higher high. And yet you can see that actually the RSI actually headed lower. So what that means is although price here went up to a fresh high there, the MACD and the RSI actually both headed a little bit lower. So what these two indicators are really telling us is that the market is a bit tired. It's a little bit tired. It's been running and running and running. It tried to run again, and it just can't seem to. It hasn't got the strength to get past this. So it has two choices now. It's either going to consolidate and go sideways, or potentially head a bit lower. Now, either one of those is absolutely fine. All markets do that. All markets need to consolidate and take breathers. And if that happens, there's a couple of different levels we can expect the price will go back down to, effectively down towards, say, the 20,000 level, which is where the 50 moving average is. You can see here price touches the 50 moving average and then touches the 50 moving average here. So to bring it back down to here actually makes a little bit of sense. That would be the sort of, once we break that low, if we start to head lower, that makes the most sense as the first potential target. This will sound very scary to the media. They'll make a big thing about it, but in isolation, this kind of behavior is always going to happen. We're always going to get moves up and then a correction. We could go sideways. If we end up going sideways, because these indicators have basically said to us, they've only now, as in of October, have said, okay, we're a bit exhausted. That implies somewhere between another 6 to 12 candles, which is about another 6 to 12 months of either consolidation or correction. So somewhere in this region, it's more likely, unless we get a very strong reaction suddenly out of nowhere, maybe January, everyone comes back, beginning of the year, everyone's optimistic, and maybe there's a massive recovery. But if we start to break lower, we'll start to, especially once we test these levels of support, the buyers will give way to sellers. It'll start to head a lot lower. And if it'll move quite quickly, and it will scare a lot of the media outlets and scare a lot of the people. But within the context of the last 10 years, it's really not that bad. And actually, this would be the first level. It could still come back down to this level. And remember, that's still nothing. I mean, it would actually, this is all the way back down to where we were at the height of the mortgage crisis. So it's unlikely to come that far down. I don't see that. I think a correction down to these levels would make sense, or potentially down to here, and it could also consolidate. So we'll be keeping an eye on this, and the best way for you to kind of stay in the loop of that is obviously these webinars should be running every few weeks or every month. Come in and just assess what is the state of the market. But that's really where it is. And then you can also look at the candlestick. It's actually telling us a lot. It's very bearish. The last time it came down to this level, we had some strong reactions off that. So lots of buyers at that point. And they would have been the same buyers that were in this market that either took profits and then tried to get in again at a discount and went back up, made money there, and just couldn't get past there. So there's not enough buyers above this level. And the buyers that are here, they don't have enough buying power to push it past that. So it comes back, then everybody starts getting a bit nervous, they exit their positions, and then it starts to shift from more bullish to bearish, coming down to these levels. So just highlighting, these are really, let's call it, put that at the low of that candlestick. That's something I'm going to be watching. Now, to go and show you this again on a different time frame, the daily, zoom out. So you can see on the daily, we currently have, I want you to just see the candlesticks. Sorry, let's just do that again, and let's move that off. You can just see how nice and small and healthy these candlesticks were in the run-up until January this year. And then you can really see how they started to get really big, much more volatile, all of these candlesticks are a lot bigger than these ones here. And so it's a lot that just increased volatility. And so that tells us a lot. It says to us that the market is going through uncertainty. So how will we know when this has gone back to certainty? In other words, how will we know when it is getting safe to trade again? Doesn't mean we can't short the market. Thankfully these days we can access that through the brokers. We could short the market and we could short it to the downside, but we really want to be sure. It has to break these levels. In other words, it's got to say to the buyers, there's no more market for you here, and we're going to correct, and therefore we know where those next levels are. So it's always about knowing where those levels are. So when it breaks to a level, we know, okay, we can now start to consider shorting opportunities, and it's going to accelerate and head down. At the same time, we can also look at candle size and also as we start to head up. So you can see at this point here, actually candle sizes started to become normal again. These candle sizes in this area are very similar to that. And so basically it started to break free of these. There's a little bit of a mini range going on here. There's a little bit of some stuff going on in these areas here. And so basically price started to break free of that and head back up. And so there was some shorter term. It became a little bit more normal, calmer, rational behavior. Then could get through that and it started to correct. And this is really where we are at the moment. The reason we have these very deep retracements is because there's almost like a 52-48% bulls and bears. All right, there's a real mixture of buyers and sellers. Just that little bit more sort of more number of sellers than buyers, and so we're getting that happening. And really keeping an eye on these levels. So anyone who's really shorting the market at this point is a big fool, because they're not gaining anything from that. It's better to just go with the market, and then when it starts to head down is to start looking at potential shorting opportunities. But clearly, while we're still in these price areas, the market doesn't really know what it's going to do next. Now, this is very much the same when we start to look at other US markets. So if I bring in the NASDAQ, you can compare the NASDAQ market. It's better to actually have a look at it on a weekly basis. Let's just do this. You can see the weekly basis here. And this is also looking quite nice and bearish us down at these key levels. Looking at it even on a monthly basis, you can see the difference. So this one was one of the more bullish of the bunch. Very strong, healthy, strong uptrend, and now looking quite bearish. Hasn't broken the previous low, so we're technically still in an uptrend, but really looking to see how that market is going to react to that. So at this point in time, until we start to break that, you'll see it start to accelerate. We really could find that we just tread water till January. And again, it's really possible people come in and they're like, oh, I'm optimistic, and then you see the market pick up. That could actually happen. But where it gets interesting, this is the S&P 500. This one's now broken these previous lows. Let me just have a look, move that one out the way. So no, it hasn't broken that low yet. So we're still pretty much in that range. But these are the US markets, and I really wanted to draw your attention to how far they've actually come since the dot-com and the credit crisis. These are, that's not that long ago for most people. And the US markets have really traveled such a long way on that. So relatively speaking, they've had the most growth around the world. So if we now go ahead and go and edge away from the US and have a look at the UK, you can see here that this is a very different thing. Here are the highs of the dot-com and mortgage crisis, and this is where we are now. We're already back down at these highs. Now, we have got Brexit, that's true, but right now, the markets, our index markets around the world are more likely to move as a result, for the most part, as a result of the US indices. So in other words, the US indices really determine most of the moves. They'll have more of an impact on our index than Brexit, generally speaking. So what I mean to say is it's very unusual that if all the other indices in the world were climbing, it would be very weird for the FTSE to go down. It shouldn't do that. It should follow. And that's just the nature of things. But at the moment, there's no clear trend here. We are back down at these levels. If we break through, psychologically, that will be quite significant. If we break through this, we'll be back down below the levels we were. But you see, if you compare that to the US markets, they're very, very, very far away from that. So let's load up the DAX. This is the German one. And you can see the Germany one is now officially in a downtrend. It's on the monthly. It's actually looking more bearish. And here are some of the previous highs that it has to get down to. But it's also, not looking necessarily as bullish as the US markets. So let me just go ahead and I want to get rid of all of these. Can I do this? Can I just keep just clean up my chart a little bit? There we go. And so you can see this is now looking a lot more bearish as we go through to France. On their monthly side, looking quite bearish. Definitely very clear resistance. No doubt just not able to get past that and already hitting a lot lower. And these are the areas that you have. You've got the Nikkei back down at its lows. So all the last months worth of price action, we often used to have what was known as a Santa Claus rally. Market would rally upwards, and that was usually as a result of an increase in production orders. We haven't had that. So it's very rare. It's like 8 out of 10 years on average that we have that. We just didn't have that this time. So, and then we've got the Hang Seng, the Hong Kong. This is also now you can see its movement as well. Everything here looking slightly more bearish. Did have some really good bullish moves. I left out Italian. That was worth having a look at. And here you can see the ASICs. This is the Australian one heading right down. So a lot of them are really heading back to these key historical levels and not really looking that bullish now. It's worthwhile looking again in January because it could actually shift between now and then. If we do start to break low, we will see a lot of shifts. What will be interesting is those US markets might have significant moves to the downside. The question is, will the size of those moves carry along to all the other indices? In other words, we're already back down at we've already, these markets outside the US are a lot weaker. So the question is, will they continue to get knocked? So if we have to go back to, say, the FTSE, well, the FTSE, if we have a big US knock, will it head all the way down to these levels down here? Will it head down further? And that would be quite frightening because it would almost feel as though the UK, for example, is getting set all the way back. Now, as traders, the beauty is we are recession-proof. We can short the market. It's always a good idea to be very cautious because, again, over time, these tend to go up more than down. And I do like them because they do trend wow, it's like I'm stuttering tonight. They do tend to trend a lot more. Then if we have a look at some of the equities, we've got US oil and UK oil and having a look at these. So these are quite nice in terms of some of the trends they've been doing lately. Weekly is in a very strong downtrend, even today and everything. Very, very nice. This is beautiful because as you go down the time frames, every single time frame is trending. I mean, it's just absolutely beautiful. So, I mean, today just heading lower and lower and lower. This is down the 1 hour, the 30 minutes. So every trend trader is trading this. Nobody's buying it. You would absolutely madness to not do it. This is a 5 minutes, even down to, say, a 1 minute. Trending absolutely beautiful every single time frame. This is basically manna from heaven. This is what traders are looking for. Doesn't always happen, but we want to be focusing on that because no matter what time frame you like to trade, are you an intraday trader or a day trader, there are trading opportunities for you here. Let's compare that to, say, UK oil. This has got a similar approach right back down to that 5 minute time frame, heading lower, even that 1 minute time frame. Really, really good ones. Okay, so multiple trading opportunities throughout the days, throughout the weeks, all looking very good. At some point, it's realistic to expect that price will come back up to test these levels of support. There's actually a secondary one just above that. There's a little one back up above that. It'll make sense for price to come back and test that and give me a potential swing entry again to the downside. So looking for those entries, as I said, on the daily and 4 hourly. So I look for nice little entries here and looking for, generally speaking, when I'm looking at the indices as well as commodities, I'm looking for 3-to-1 trades. More than that is cream on top, but I'm trying to be realistic. I've got to earn a living here. So 3-to-1, ideally reward to risk. If I can get 5-to-1 or 6-to-1 or 7-to-1, fantastic. But what's important, ladies and gents, is that you can see that for me, these are the charts to trade because there's a very clear direction in them right now and on multiple time frames. So that being said, let's go and have a look at gold and silver. So gold and silver now starting to potentially move a little bit higher. Silver is currently unable to break out of its resistance level. All right, and a stronger US dollar will not help that at all, keeps it back down. Gold was doing relatively well. It's trying to get up through its level. We drew in those levels earlier. We can see price looking to do that. So some potential trading opportunities on the lower time frames. Okay, it's also encountering some resistance here temporarily at the moment. You can see that there. So I will be keeping that on my watch list. And then we're really left with currencies so the question then is, let's go through this and have a look at these currencies. Let me just get rid of all these lines and have a look at them. So starting off with the euro against the US dollar, you can see quite a long list of different currency pairs I can look at. Starting off on the daily. Again, immediately no clear direction here and a lot of spikiness on the top of the price action. Basically, this is very much range-like behavior. There's no money-making opportunities in this chart right now at all. If I then move across and have a look at some of the other currencies, move across to sterling. Sterling is a little bit better, but it's still not as nice as oil as we saw. But if you look here, we've got a nice level of support. We broke through that. We've then rejected that. So price is trying to get back past that level. We'll see how that goes. Then if we start to look at some of the other charts, what I'm looking for here is I want to see price currently trending as nicely as we saw on the other charts. So the top-down approach and the bottom-up approach that I spoke about before, just to use an example, the top-down approach would be looking at the top up here like the monthly, saying, okay, that looks quite bearish, then going down, going, okay, the weekly looks bearish, down to the daily, okay, the daily looks bearish, and going down a time frame until I can find an entry point. Okay, so there might be something setting up on the 30 minutes, and that's where I look to do it. Whereas a bottom-up approach might be that, let's say, for example, I'm an intraday trader, and I only, or I have a habit of trading the 15-minute time frame. Then what I'm going to be doing is looking at this going, okay, this looks really good. What I need to do is make sure that I have the higher time frames in agreement. I probably want 2 or 3 higher time frames in agreement. So I look at the 30-minute, that's going down, that looks good. 1 hour is going down, that's good, and 4 hours going down, that's good. So I've basically started at the time frame I want to trade and then looked at 2 or 3 higher time frames to make sure they're going in the same direction. Also, we always want to take note of where the daily, weekly, and monthly have their key support resistance levels, as you can see how those actually play out. So to carry on here, so having a look through a few of these, what else is on my watch list? So having a look at a few of these pairs. This one's just about to start an uptrend. It's finished this downtrend. We came up here, we broke this high. This downtrend is no longer in play. Now we're wanting to produce an uptrend. And there's a few charts that I have actually been looking for. This one's got a clear momentum to the upside. Keeping an eye on key support resistance levels. You can see it actually running into it here. EuroCAD's not bad. Euro Swissy, does it have a direction? It does. It's trending downwards in a pretty choppy fashion, but it is doing it. What's happening with Euro GBP? That's trending up. So you can see as I'm going through them, I'm going, is it not trending or is it trending? And if it's trending, how clear is it? Is it trending in a very clear, strong fashion, or is it a bit choppy? And then I'll focus on that. So this one's interesting. This is setting up with a potential breakout. So what's actually happening is it's heading in lower highs. If I just draw in a quick trend line, just to give you a sense of that, something like that, just to show you the lower highs. Price may well break through this level, and if it does, it'll then head down to the next level down here. And that's looking nice and bearish. What I'd like to see is a few more of these touches build up pressure, and it'll be a breakout to the downside. So that is in the direction of the overall trend. It's looking bearish, and it is looking quite keen to break out to the downside. Not quite there yet, and but I'd like to see ideally a few more lower highs, or 1 or 2 more, get it closer into that corner and have it break out. We've got Euro Kiwi, also now in an uptrend technically, but also if you look at it from a weekly perspective, you can see it's just quite weak, not a lot going on there. So it's not the best one I've seen. Let's have a look at Pound Aussie. There were a couple on my watch list for today. Too choppy, no clear direction at the moment. Let's look at Pound CAD. Clearly not worth trading, just too choppy. Pound Swissy was on my watch list. Here we go. We had a downtrend. Price coming back up. These nice little bearish candles here, rejection candle here. I'd be looking for a break of the low of the yesterday and the day before Monday's candle as well. Looking for a break of that to see it resume that trend to the downside. It's a relatively nice trend there. And CAD Yen, of course. So let's just have a look at one more here. So CAD Yen, trending beautifully. This was one of my, the same thing again, was a nice trend based. It was pretty straightforward in terms of its approach, coming back into test resistance and support, finding a nice little bearish candle, moving averages fanning out. And so what I wanted to demonstrate to you, because I'm wrapping up now, is that first of all, it starts with choosing a chart with a very clear trend and then looking for a nice little pullback into that. And again, this would have been another one with opportunities even on the much lower time frames. This is the 15-minute time frame. There's our 5-minute time frame. There's the 1-hour time frame. They have been, it's really for whether you're a day trader, a swing trader, or an intraday trader, that it's really always going to be about the chart. Which chart are we going to be looking to catch fish in? And it should be something with a very strong trend. And price action is a good way to help us determine if the market is unclear about what it wants, unsure about what it wants. If you go back and compare this chart to, say, the euro dollar, you can see that right now it's just not tradable. Even if I go down to, say, the 1-hour time frame, it's just too unpredictable. The 4 hours, just madness. So traders, professional traders, will stay away from charts without any clear direction, and price action is very much telling us that. And then we look at those horizontal levels, and we get all of the information that we're really looking for on that. So there we go, ladies and gents. I want to leave you with these contact details. I do hope that you found this presentation quite useful. I've thrown in a lot of information in it, going about how I select charts to trade, the timeframes that I'm looking for those trading opportunities on. They have things in common. They're always trending. They have strong momentum. Then it becomes about very clear entries and also looking to take profit. I've taken you through my approach to that as well. And the contact details on the chart are on the slide deck in front of you. I do hope that you've enjoyed this. What I'm going to be doing is ending the webinar now. It's going to hoof all of us out, and I want to wish you a wonderful evening. I know we're heading in towards Christmas and New Year's, and if I don't chat to you until January, I do want to wish you a Merry Christmas and, of course, a Happy New Year's, and hopefully you get to spend time with your families and get a little bit of sunshine on your face. So there we go, all cuddle up, I guess, next to the fireplace with a drink or something like that. But I do want to wish you a good evening. So thank you very much. I'm going to end the webinar now. It is being recorded. It'll be up to ATFX if they want to send that out to you in the follow-up emails. But I want to say thank you very much for your time. I did actually enjoy it, so thank you very much. Also wanted to show you how I went about using the platform. So that being said, have a good evening, and yes, good night.